fun.
All right, look. Oh, here we go.
Oh, are we live? Starting soon. Look at that. Beautiful.
I don't know.
We'll find out. Right. Are we live?
Yes. Oh, there we are. We're there. I'm watching on X. First time we've done one of these. I'm doing like a big. We're live. We made it, everybody.
Oh, look at that.
Look. Oh my goodness. This guy's wearing sunglasses down there.
Straight out of Central Casting,
Look
I must
at
say.
this. Unbelievable. Mr. Brian Belski's here on the very first social hour live stream of the Facts versus Feelings podcast. Brian, how are you doing, sir?
I'm good, man. Since you guys were drinking, or supposedly drinking,
Oh, no.
I'm wearing my alma mater, St. Cloud State, which in 1988 I think was a party school of the year, and I can neither confirm nor deny any rumors regarding my behavior in 1988. But I'm sure there's going to be cards and letters coming. So here we go.
Well,
St. Cloud State. Where is that?
St. Cloud State in the great state of Minnesota. So I was born and raised there, and I chose St. Cloud over the University of Minnesota for a bunch of reasons, but it served me well, and I'm here to talk about it. I survived it, which was half the battle back in the mid '80s, early '80s when you went to that school.
so
Doesn't look like you're in Minnesota now, though.
No. I had a change in life a few years ago, and I became a full-time Florida resident in 2021. So those that know me know that I love the Minnesota Twins, and in fact, big news on the Twins and the Vikings today. I mean, it's like Loserville, USA, for a lot of reasons, but the Twins and the Vikings fired their front office people today, which is amazing. They did it the same day. So I've had Minnesota Twins full season tickets for 26 years. This will be my 26th consecutive year. When I worked for Merrill Lynch in New York, I used to sell my tickets to a scalper this is back when the Dome was still there. I would pay for my entire Twins season tickets, guys, for selling for the entire year by selling my Yankees tickets, my Blue Jays tickets, my Brewers tickets, and my Cubs tickets. Yeah, and that's how cheap the seats were at the Dome. But so I'm a huge sports fan. But anyway, especially Minnesota sports. So the Twins play in Fort Myers, which from where I live in Naples is only half an hour away. So that's a big reason why I'm here. So I've been coming here for years, and I thought, you know what? No more Minnesota taxes, no more Minnesota cold. Move to Florida. So that's why I'm here.
Well, that's neat. That's awesome. I have been to St. Cloud a couple times. I've done some with some of our Carson partners up there. Shout out to Jeremy Wilner, probably listening right now. Been to St. Cloud, so it's a small world. So I will say I have Detrick whiskey right here. Look at that. It literally says Detrick whiskey on it. It's special. I don't drink it all the time, but I'll have just one on here. Right. I don't even know if Sonu and I are technically allowed to drink because are we working? I'm not sure.
I have a Goose Island. It's called Matilda. I like the sisters, so Matilda, Sophie. I have one of these, and I will pour myself.
There we go.
I don't know. We'll find out if you're doing this next.
Well, this might be our last one. I don't know. Brian, we're pumped you're here. I'm pretty sure most people know who you are, but nonetheless, there we go. There we go.
Like it.
Tell us a little bit about yourself, sir. What are you up to? What do you do anymore? And what are you up to? And then we'll probably talk about silver next. I want to talk about silver. My goodness. Crazy day.
Thank you so much. We really appreciate the time and the opportunity. This is my 36th year on Wall Street, believe it or not. I started when I was 8 years old. And this is an amazing business, as you guys know. It's so much fun. And no matter how much the financial services industry, quite frankly, tries to screw it up, this is a great business. And you talked about the great relationship that you have with your partners in Carson and St. Cloud. This is a business about relationships. And what I've learned as you've gotten older is kind of like the movie Knocked Up. Look at the scale and subtract by 20, and you just got to tighten it up. And what I mean by that is you got to tighten up your circle, man. And there's a lot of I'm blessed and fortunate to know a lot of people out there, and through all of my times. But what's really interesting, it was so gratifying, guys, when I left BMO and started my own firm, and we'll get to that. The people that reached out to me are just unbelievable. I heard from people that I worked with back in 1991-92 at William O'Neill in Investors Business Daily. Ryan, you probably don't know that I was a technician when I started my life.
Okay.
So, and then I morphed my way into strategy. So I wrote my first research report on Wall Street in 1989 for some brokers that I used to serve drinks to on Lake Minnetonka. And I couldn't get a job in the business in 1989 for a lot of reasons coming out of the 87 crash. They weren't hiring young punks out of college. So I worked as an accountant during the day and bartended at night. And I met some guys from a firm called Dane Bosworth on Lake Minnetonka. And they liked me for some reason. We started talking about stocks, and I didn't want to be a broker. No offense to all you brokers out there. I didn't want to be a broker. I wanted to be an analyst. So I started writing research then for them. So then I got engaged, moved out to California, got my job at O'Neill. That was an amazing experience, man. Working for Bill O'Neill, my very first mentor. I met Warren Buffett, Charles Schwab, and Peter Lynch in the first 6 months of my job on Wall Street. Anyway, so then I went from there, moved back to Minneapolis, worked for Dane Bosworth. I'm just giving you the big highlights. Piper Jaffray, Merrill Lynch in New York was the big job, right? Was doing U.S. strategy, head of U.S. sector strategy, and then was there during the credit crisis, and also ran the Chuck Clough client profile portfolios when I was there. And that's really where we started running real live money. That was 2005 to 2009, where you do, as strategists and technicians, you put out model lists and all this kind of stuff.
Sure.
But that was really the first time we ran real live money, where we were measuring the performance and all of that. Then we were RIFT, reduction in force, three times in my career. That was the third time. And you need a little humility in this business, and I'll touch on that in a second. But Oppenheimer picked us up, man. And what an amazing run there, 3 years. And we had a really great crew following Merrill. And then the Canadians called at BMO, and I was there for 13 and a half years. And, part of the reason why I took the job was, number one, I think I understood the culture, passive aggressive, because I grew up in Minnesota, and I was still allowed to work in New York. So I had the passive aggressive meets the New York aggressive. Plus, they allowed me an opportunity to learn Canadian strategy. For so many years, I was marketing institutional strategy up to Canada, which is different than actually doing Canadian strategy. But then the real kicker for us is they afforded us an opportunity to run money. So we built a separately managed account business there from zero assets to $12.5 billion by the time we left. We ran 10 mandates, 15 different products with 4 people, plus doing our 2 other jobs. And so we were very blessed and fortunate to have a lot of great people around us. I know a lot of great analysts around Wall Street that helped us make those stock decisions. And we decided, you know what, after 36 years working for the man, it was decided for us to be the man. So starting your own shop is overwhelming, equal parts overwhelming and excruciating. But at the end of the day, it's been a blessing. So the firm is called Humulus Investment Strategies. And our tagline is investing with conviction and humility. And people think, oh, there's Belski's cocky, da-da-da-da-da. No. I'm convicted. I've always been the same. My delivery's always been the same. And I remember back in December of 2000, Ryan, you're going to love this story. December of 2000, I was head of U.S. I was chief strategist at Piper, even though I didn't have the title because the technician there didn't let me have the chief strategist title, so they called me fundamental market strategist. Anyway, so I was underweight technology in December of 2000. And the reason why I went underweight technology was a big part of it was I did my first European trip for Piper in October. And man, everyone was all bulled up, and they used to call it TMT back then. We were doing white glove lunches in Geneva and all this sexy stuff. And I'm like, holy crap, this is not going to end well. Plus, I was already worried about valuations and remember we had the rally in April, then we had the top in April, then we draw down, and we rallied right back up in the summertime. I'm like, this is not going to end well. So here I am at an investment banking growth shop, Piper, and I'm the strategist. I go to an underweight in technology, how to make friends and influence people. So there used to be this show called Wall Street Week with Louis Rouget.
Yeah.
And I get invited because of the call. And I'm going to swear here. So I was scared shitless.
Yep.
Okay. So I'm backstage pacing and like, God, just give me something, give me something, give me something.
So this is 2000, like somewhere around that.
Dude, no, December of 2000. I mean, the cracks were already in, the chinks were in the armor, right? But nobody believed it yet.
Yeah.
Right? Nobody believed it yet.
Sure.
Anyway, so I'm underweight technology, not popular. They called me on the show because of that, right? And so I've been doing CNBC and all that for a couple of years before that. But anyway, I'm pacing backstage. I'm like, give me something, God. Give me something, God. And the scripture came down to me from above, and it's Micah 6:8. It's one of the last books. I think it is the last book in the First Testament. It says, God asks you to do a lot of things. I'm paraphrasing, but you absolutely must act justly, love mercy, and walk humbly. And so every time, like I quoted the scripture in my head before I came on camera with you. I do it before I go on CNBC. I do it before I do anything, because I'm not the smartest person on this call. Let me just be clear about that. I think too many people in our business think they're the smartest people in the room all the time. I learn every day. And the greatest thing about Wall Street, the greatest thing about investing, that things change every second. Prices change every second. And that's what humbles you. And we've been wrong, and we'll be wrong again. And we're known as bulls because we came out with this call in 2009 that we believe the U.S. stocks have entered a 25-year secular bull market. What's crazy about that, man, people still don't believe this. I think it's fantastic. I think it's fantastic they don't believe it. But anyway, so you have to have some humility in that. So now we're running portfolios for 3 U.S. clients, for 2 Canadian clients. We announced an allegiance with an ETF company in Canada yesterday. So we're going to provide ETFs for our great Canadian crew. And then we're going to be announcing our U.S. ETF business, and we'll be out with that in May. And we've got about 5 to 8 broker dealers and or RIAs. Hopefully, Carson, Bert White. Hello, Bert. Bert, hello. But anyway, we'd be honored to be on platforms. We're just going to kind of keep it tight and run money. And we run 5 different U.S. strategies from the bottoms up, own 50 stocks, and we've got amazing numbers. So we're very blessed with that.
So these are all stock portfolio strategies.
100% stocks. I'm not. Listen. Here's what I understand about fixed income. Okay, I'm a stock guy. It's all about duration and convexity. That's about all I got. That's my best thing in there. But I've got a person that works with me, not for me, with me, for 19 years, guys. Think about that poor son of a bitch. He's worked for me for 19 years, and I stole him off the fixed income desk at Merrill Lynch, and he's my macro guy. So he kind of evens out my crazy bullishness. And then I've got an ex Goldman Sachs, Deutsche Bank investment banker. And then I've got a wonderkind Gen Z person that runs around that does all the great media stuff for us. And he does great market commentary for us. And then we're in the market for another analyst here soon. And so we're very blessed, very blessed.
That's great. You know, I mean, I want to get into markets and stuff. I'll quick story from me on media. So you mentioned your media. So the first time I ever did TV, I think it was summer of 2004, maybe summer of 2005. I was at a small options research shop. That's back when like you could like buy almost a spot. They bought somehow a hit or something. And I'm on there with Bill Griffith and Reggie Jackson. Yes, that Reggie Jackson, Mr. October. It was Trader Magazine. I was the expert, and he was the star. Anyway. Before I was doing it, I was pretty darn nervous. I was young. I didn't know what I was doing. I mean, I still know what I'm doing. They keep asking me to come back, so it's nice. But I didn't have a clue what I was doing 20 years ago. And this guy who did a lot of TV walks right up to me, and he goes, "Hey, heard you're going on TV. You know, da da da. We're talking." I'm thinking he's going to give me, Brian, like this great advice, like this. He sat me down, and he goes, "Here's the key to going on live TV." I'm like, "Oh, it's exciting. I really need to know this." He goes, "Just don't F up." So to this day, anytime I know something, I say, just don't F up when you go on TV. It's very simple. Just don't do that and you'll be invited back. It's
I feel like that's my tagline every morning I get up.
Yes, exactly.
Whether it's with the kids or,
yeah.
whatever it is.
Well, let's have some fun. Let's get into this. Gold's down like wrong one. Silver's down like 30%. Gold's having its worst day in a long time.
25 now. 25%.
Oh, good. It's rally. I mean, Sonu, you've been digging into this. How about Sonu? Give us your thoughts, and Brian, if you want to chime in. But Sonu, what are you seeing in the metals market today?
Oh, we've been bullish metals for 3 years. I mean, but gold, right? I mean, we manage portfolios, things like that. We've had gold in our portfolios for 3 years. So, safe to say we've been bullish on metals. And even over the last several months, we've had, some metals, mining stocks, things like that. And we do ETFs, picking individual stocks right here. So I've always been in the camp that, look, especially after what happened over the last 20 days, with gold jumping, 20%, 25% year to date, right? Silver jumping, I don't know, some crazy amount, 40, 50%, things like that. One thing that I don't want to say bubble, because I don't think it is a bubble, but one thing that could prick this would be if we get any hint of a hawkish Fed. And then you get the news from last night, all right? And we can get into Wash and the Fed chair and things like that. But, my general thought is, it's not like I think Wash will be hawkish. No, I think, he's going to follow the president, and I think he's getting the job because the president thinks he's going to drop rates. I don't think you need to second guess that. But this is a guy who's been an inflation hawk throughout his career. He changed his tune twice in 2017 when he wanted the job, and again in 2025 when he wanted the job. So I mean, which is fine. Like, all of us change our, that's fine, whatever. I just think he's not going to have a lot of credibility with the remaining Fed members now, unless, look, the economy crashes or the unemployment rate goes up to, let's say, 4.7%, yes, then I think we get cuts. I think otherwise cuts will be hard to come by. And so I think, putting him in there sort of tilts the Federal Reserve hawkish to at the margin. I'm not saying they're going to see rate hikes or anything, nothing to the sort. But that's all it took to sort of put a little bit of a pinprick into what was happening in the metals complex.
Well, Brian, 1 second. I made a joke to our team this week when I started seeing Peter Schiff all over the podcast. I literally told our team on Tuesday, like, "Oh boy, this is a warning." When Peter Schiff is celebrating for being bullish gold, and congrats, he was, but he's also been bullish gold for a long time. I said, "Oh, contrarian warning," and here we are. Brian, in sunny Florida, is there a hawkish Fed, dovish Fed? Do you even care? What are you seeing down there?
I don't care.
Yeah, I figured. Yeah.
I really don't. I think the Fed has proven that, I hate this term, data dependent. And I think people forget so much that it's a dual mandate. And, I remember back in 2022, and we were wrong, man. We were wrong. We thought inflation would roll over a little more, and that's when we started continuing to really kind of reinforce that. Inflation goes up like an elevator and down like an escalator. Well, unfortunately, the escalator stopped a lot in 22 and 23 and 20, and has paused more than we thought. I think the next probably move, my guess is that inflation goes down. That would be my guess. And if you want to also talk about commodities, if you look at the CRB metals index or the CRB overall index, and you look at it relative to the underlying currencies, and then you also compare it to the forward price in the market. When commodity prices go down, market goes, the price of oil goes down. So I think it's going to be, from the sector perspective, I think it's going to be really hard. And I know a lot of people are all hopped up on Mountain Dew with respect to materials and energy. We're not there yet, because we do think that CRB index is going to be down, because I think commodities are going down because inflation is ultimately going to go down. I think, Sandy, what you said about the Fed's really interesting. I grew up in the market in the 80s and 90s where we had a lot of dissension in the Fed. And post the credit crisis, because everybody wants to kumbaya and get along together, we haven't seen a lot of dissension. The last couple of meetings, we've seen maybe some semblance of it. So maybe do we see a little bit more actual dissension going forward? I mean, we talked about the credibility with respect to what's going to happen with the Fed. We, and our former shop, we went really bullish gold summer of 2022. And we like to be the best book I ever read on investing is called The Art of Contrary Thinking. And you want to be contrarian on gold. And we've been early on our cautiousness of gold. We've been telling our Canadian clients now for 2 or 3 months that they should be scaling out on these big spikes. And of course, they're not going to believe me, and that's okay. I mean, you never want to get into a jousting match with a Canadian investor with respect to gold, oil, or banks.
Yes.
Okay. That's what they own and they love.
Well, listen, Sonu means gold in Indian, so just know who you're dealing with here. Yeah.
Well, so there you go.
Whatever I say with a pinch of salt, or
it's really cool, Sony. You should run the analysis on this. I'm not a smart man, but you are. If you look at the anytime the price of gold reaches 3 times the standard deviation above the standard deviation at 3 standard deviations. Now I think it's at 5.
Okay.
But typically and historically, gold underperforms for the following 12 months. And so when I look out as an investor and we do on our portfolios, I always look out 12 to 18 months. Man, we're dead ass wrong on gold right now. But the chart's giving you the finger, Ryan, and I learned as a technician, anytime you see that, you got to start applying more caution. So I'm more worried about gold. I think that the momentum is done. But at the end of the day, people are there's still that hidden bid in there because of central banks and everybody kind of believe in the Mo trade.
And coming back to something you said about, even I've been thinking about dissension within the Fed.
Yeah.
Right? And how that used to be common. In fact, up until Greenspan's time, let's say 1986, 1987, our friend Sam Rowe put this tweet out, from JP Morgan, shares used to be outvoted more often than not. Then it stopped happening, right? After 86. I guess nobody wanted to cross Greenspan. So, maybe take you at the back and hit you or something. It's, right?
Well,
sorry
for interrupting, but if you go back and look at the history of Volcker, right? So there's that famous story of 1982, you probably know it, that Reagan got a bottle of scotch and invited Tip O'Neill over, got him drunk, and also Volcker came over and said, hey, things going, otherwise we're going to a double-dip recession. And then so Volcker cut rates, and then 2 years, and that's what many of us, and Ryan, being an amazing bar chartist like you are, the 82 bull market started right then, right?
Right.
So that was the kickstart. So then if you go back 2 years later and everybody talks about President Trump being a bully on the Fed, man, you can go back to the famous story about Johnson inviting the Fed chair down to Texas and throwing him up against the wall. People forget about all this stuff. Anyway, so go back to 1980. Right, he's a big dude. So you go back to 1984, 2 years earlier, Reagan was doing this, clapping woo to Volcker. Then in 1984, he's like, "What's going on, man? You want to raise rates? You're going to kill it, right?" So Volcker he lost a lot of credibility in the Fed before he left, and so that's why they had that dissension so late in his tenure. And plus, you got to remember too. Let's go back into the late 70s, which I remember. You guys weren't alive, but
let me jump in there for a second. It turns out Sonu's older than me by about 5 months. I like to point this out repeatedly. We are 1978, but Sonu's clearly older than me by 5 months. That's all I wanted to say.
You're the same age now.
You're still older, old man.
So in the 70s, you had this, you had the inflation, and then you had the dual deficits, and you had the embargo, and all this kind of stuff. And so we had interest rates that were out of control, and so that's why so much dissension. So again, I think a little ascension might be a little healthy for the Fed. I think it'd be great. And I think markets, that you're going to love it, Ryan, because you're going to see that much more volatility. That's how we make money.
Yep. No, exactly. I want to tie it back to stocks because one thing, this probably ties to Kevin Warsh as well, because Warsh, going back to, I think it was 2010, 2011, he's always been against, the Federal Reserve's balance sheet is too big, and that's what's propping up asset prices. You can think of that as a chart that divides the S&P 500 by the Fed's balance sheet. I mean, it's that view. But, somebody has asked me about that today. I was like, no, but look at profits, right? Over the last 15 years, going back to your comment about a 25-year bull market, well, last 6 years, the S&P 500 is up 132%. Last 3 years, 25%, 18%, right? And all of that has come on the back of profit growth. And I'm like, so, whatever you think about the Fed and policy, and that's part of my job, obviously. So I probably still have a job because, they do what they do. But the reality is market returns have come on the back of profit growth, right? So and I think we have the best, most dynamic companies in the world, we kind of, reflected that amidst all that tariff chaos and things like that last year. Margins are expanding. So talk about that in terms of how you go hunt around for stocks and your perspective of what you've seen, even the companies you own, right? In terms of profit growth, margin expansions, things like that.
So when we wrote our year ahead piece for 2026, we had the great fortune of being able to publish it the first week of January. When we're in the institutional world, we play the Ricky Bobby rule of being first year last, and so we used to come out like a week before Thanksgiving, and then by the end of the way the crazy markets have been, by Christmas you hit your target for the next year. But anyway. In our year ahead piece, we talked about this transition of the bull in this fourth year of the new cyclical bull market that started in October, November of 2022. The first 3 years, obviously, were multiple driven markets. Multiple expansion bull markets are much more powerful, much more momentum driven, and that's clearly what we've seen. What we believe that 2026 is going to be is more earnings driven. Now, earnings driven markets, people have a hard time understanding them because they're not as exciting and sexy. And they usually have bigger drawdowns historically relative to other multiple driven markets. So we had a heck of a drawdown last year, and some would call it a technical cyclical bear market. However, we think that we're going to see more volatility this year as we start to see increased dispersion, which everybody talks about, but no one really understands. Then you have differing fundamental dispersion in terms of earnings, valuation, cash flow, but also from the technical perspective in terms of performance. So we think that this is going to be that type of environment that we're heading into, more earnings driven. I think what everybody and their mother, brother, sister, cousin, uncle is missing is that the technology sector, everybody's talking about high quality stocks. Well, technology is number one quality for a lot of reasons. But the biggest reasons is such low standard deviation of earnings growth. And so if you have in the business, if you have some fancy institutional people listening and they got FactSet they've got this measure called earnings stability. The lower the number, the better. That means that you have a low standard deviation of earnings growth. The variability of earnings has really gotten tight. Technology companies are juggernauts. Now, I know we had the Microsoft news this week, blah, blah, blah. I actually think that was way overdone, and it affords us an opportunity to be more aggressive on that stock. But at the end of the day, U.S. companies, again, going back to Warren Buffett, I mentioned before, everybody gives me crap for not being, we're going to be bullish on international. Yeah, you can be bullish for international for cycles, but at the end of the day, if I can't reach out and touch the company, I'm not going to own it. And if we have such amazing companies here in the United States, there's no real reason for us to go anywhere else. So, that's why we remain bullish. Yeah, we're not going to be as bullish this year as we have been in the past, but bullish is bullish and positive is still positive.
Actually, on that, combining international, but tying it to that tech story, this morning we got Taiwan's GDP numbers, by the way. Real GDP growth, 2025, 8.6%.
Wow.
8.6% GDP growth. What do you think Taiwan's economy is made up of, right? Like getting to the technology story. Q4 was 13%, 12.7%. That is insane, right? And that's why when I think, when people say, maybe the tech story is done, AI story is done, I'm like, no, not quite. It doesn't seem like, it seems like, I don't, who knows, big first innings, second, third, whatever it is, but it seems like there's a long way to go here.
Well, I mean, if you're talking to our great mutual friend Dan Ives, it's going to go up forever and everything's positive. I love Dan. I love Dan. I meet with Dan and we have hour-and-a-half long discussions about what he doesn't like, and I can't get him to tell me what he doesn't like. He's such a kind man. He would never say anything bad about any company. But Dan has been extremely helpful to us the last 15, 20 years, however long I've known him, in terms of just the bare bones, bottoms up stuff on tech. I think this whole AI thing is early, man. I think it's still very early, and I think, but you're already seeing the dispersion in tech on who's the winners and the losers, and I think that's only going to increase this year, which is the charts are going to be so helpful in this, number one. But number two, you have to tighten up your stock picking. And I think cash flow and return on invested capital, all these things are going to become so important to picking tech stocks going forward. And there's going to be some clear winners.
Great stuff. I want to dive a little bit more into your call for a 25-year bull market, but I'll do a little story so you guys take a breath for a second. I've talked about the The 7-year itch before markets made a major high in 1929. We know they crashed and eventually made a new high in 1950. Add 7, 1950, bear market in a recession. History didn't repeat itself, but often rhymes. That bull market went for another 11 years. Then the 70s happened. Terrible time for investing. Economy was okay, but inflation was high. We all get it. Low productivity. Then a funny thing happened. 1980 made new highs. Add 7, 1987 crash, but then for 13 more years, the bull went higher. I know you're talking 1929 or 2009. Technically, the market went sideways till 2013, broke out the new highs. Add 7, 2020, the 7-year itch. The previous times after the 7-year itch went 11 and 13 years. I've kind of had a similar stance to you. I kind of go with the starting point, technically, of the breakout in 2013. But either way, I've been in this camp with you. We have decades of a bull market. Doesn't mean every year is going to be higher. 2011's down, 2015's down, 2018's down, 22's down. We get it. So talk to me again. What are the main drivers and what turned you so bullish, what was that, 15, 16 years ago, to talk about a 25-year bull market? And how mocked were you? Because I remember 2013 when I was pretty bullish. I mean, people hated it. They hated it, Brian.
Well, I remember when I was at Merrill Lynch and the wheels were already coming off. And people are going to correct me, I'm sure they are, but within 3 or 4 days, brothers, Bank of America was inside Merrill Lynch in that date, the September date, like the transition thing. And we knew at some point we were on the chopping block for there's some other reasons as well. But so you know what? We were so negative there. We as a firm were so negative. A lot of that was psychological too in November, December of 2008. So I'm like, you know what? Here's the deal. I know I'm going to get cut. Let's be bullish. So I wrote a positive year ahead piece for U.S. stocks for 2009. Wasn't very well received. I said, and Rich Bernstein, the great Rich Bernstein, was in charge of putting the target for the S&P 500, but I was in charge of the sectors and what the themes were. And I said in my year ahead piece, I said, stocks will be up double digits in 2009. Oh my gosh, I got it.
Yeah.
So then I was able to have my own call in 2009. And we were there. We got picked up and we were there in Oppenheimer in February. And then we saw the lows in March and we launched. And I think what made us so bullish about in 2009 was the amount of apathy and just pure fear. We literally, after everything we went through in September and October of 2008, we actually didn't know what was going to happen. We didn't know. And then in 2009, we thought a new administration, everything's coming in. Here we go. We're going to spend money. And then we had the 666 lows. And I already talked about faith before. 666 is biblical. It's the mark of the beast. And I had this as a Christian and as someone that has faith. And I've received a lot of crap for this, man. So I'm sure I'm going to get this. There's faith is not an investment strategy. Oh, yes, it is. So and it is with respect to life as well. And so we went bullish. We think a new bull market starting. So here's the funny part. You'll hopefully track this. So interesting. So I'm this new strategist at Oppenheimer. They had the great Michael Metz was there before me. You probably don't remember who that was. And Oppenheimer was the very first brokerage firm in the state of Israel in the 1940s. And so I'm over in Tel Aviv at the May 2005 conference for Oppenheimer. I'm at the Intercontinental Hotel in Tel Aviv doing my big coming out hour long, dog and pony show. And across the hall, Rubini was making where the markets are going to 500. And I'm literally and figuratively jumping up and down saying this is a generational time to buy stocks. So if you think about the book ratios on banks were literally nothing. PE ratios were down to 8, 9. You had earnings growth that still looked pretty good. You still had companies that were making money. The consumer actually, even in the first quarter of 2009, people don't remember, we're spending money. What we do in America is we do a lot of good things, we do a lot of bad things, but what we're really, really good at, spending money.
Yes, it is.
And consumer discretionary, you always want to be bullish when it's dark and there's blood in the streets. When you think you shouldn't, because the consumer will always. So those are the things that really made us super, super bullish. But also to technology, because even in 2009, technology had massive balance sheets. People forget this, and that's what really kept us. If you go back, if I look at where we were bullish then in the sectors, was technology, it was industrials, it was healthcare, and it was the consumer. That's what we went out with when we were at Oppenheimer. And so fast in those meetings in Israel, oh my gosh, they were amazing, first of all, but they were screaming at me. Israeli clients are really aggressive. Like, you have no idea what you're talking about, Belski. Well, I went back a year later and that. But if you go back to 2013, I want to address this because you need to talk about 2011. And 2011 was an ugly year, brother.
Oh, yeah.
That's when the dollar actually bottomed. And I was institutional marketing in Europe, and I was in Switzerland, and I was having a meeting with the CIO of a company that starts with U and ends in S. And he was telling me, and there's a B in there too. He was telling me that in June, listen, this is beautiful. In June of 2011, that the Swiss franc was going to become the world's reserve currency.
Really? Wow.
I got so bullish after that. I said, we're within weeks of a bottom. I mean, this is fantastic. I love it. And then if you remember, that was some political consternation with respect to the Tea Party and the shutdown. I called it the stupid committee because they called it the super committee. I remember I was in front, it's like the stupid committee is going to drag this thing out.
And then we got the sequester and all sorts of things.
Yeah. That was the next big entry point, right? So you had the 2009 lows, then you had the 2011 lows, and then you had the silliness of the election in 2012, and then 2013 where Ryan jumped on. But you're not too. I mean, honestly, they don't believe you now, right, Ryan? They don't believe you now that
well,
started.
Well, I'll be clear. We actually, the place I was at, a place called Schaefer's Investor Research, made a name for myself. We were pretty darn bullish in 2009, 10. I mean, I'd go on TV like once a week because they'd call me in 2010 and say, "You guys still bullish?" I'd say yes, because there were no other bulls. Like, it was to that point. But I know we've got like 20 minutes. It's amazing how fast this goes, Brian. I want to take a different little turn. So I had a bunch of travel issues this week. I flew around. I mean, literally, flights coming home, flights getting there, everything canceled. Everything was just a mess. But I went through Denver yesterday. I was not supposed to. I was not supposed to go through Denver, but I ended up in Denver. I was starving, absolutely starving. And I said, you know what? I'm going to get a steak. I'm going to Elway's. I didn't have lunch and I had breakfast. So I went to Elway's Steakhouse in Denver. It was the best meal I've ever had in an airport. Brian, you travel a lot. What cities do you like to visit? And everybody wants to know, what restaurants do you like to visit as well?
What's your favorite airport as well while you're at it?
Yeah. The Denver airport, Elway's, man, it was killer yesterday.
Hey, were you in the airport alone, or did they fix the whole check-in thing there? Are you able to get through that when you get to the airport? Did they fix that and update that, or are you just inside the airport?
Well, at Denver, it was just a layover. I started in Fresno, layover in Denver. I have no idea. So it was fine. I don't know.
Yeah. It's a great question. So people that really know me know that I get to the airport as late as humanly possible.
You know what? I tell people that if you've never missed a flight in your life, that means you're going too early.
You're not trying.
I've only missed one flight. I missed one flight my entire professional career, and it's my assistant put the wrong time zone in. And I was in Austin, Texas, and I was on a Southwest flight. I was supposed to fly somewhere. That's the only time in 36 years I've ever missed a flight. All right, so favorite airports. I don't like Atlanta. It scares me. I've run through Atlanta Airport. How about this? Best airports to run through. Atlanta.
There you go.
Denver is a great airport to run through because you can run
great
through
shots. Yeah.
Yeah, they have some great restaurants there too. But I guess I don't know. I think the Delta Sky Club's got the best food of relative to the United Sky Club. Let's go that. I think that's better.
Interesting.
Restaurant wise, Elway's is pretty good. I would tell you, for me, the best airport in the country is Minneapolis, and the reason is number one, I grew up there. Number two, you can zip in pretty quickly, and probably like you, I'm like, I got the Clear, I got the PCSA, and then at LaGuardia, if you're running Delta, you got the I thing, you just zip right through. Or at Newark, you have the on Clear, you zip right through. So I literally, man, like if I'm traveling with somebody else, they have massive anxiety, because I'm like, okay, so what time do I absolutely positive? What's the latest I need to be there? I mean, they've held planes for me before. It's pathetic, but I'm like, I've run to the gate before. But I think it's like fun to get a charge through it. So I don't really have a favorite anymore. My favorite restaurant,
Yeah.
a long time ago was a place called the Wild Ginger in Seattle. It was down on Ocean. They moved it up to Fourth. That's an amazing place. Seattle used to be an amazing town to travel to. But at the end of the day, I have to say my favorite town. I mean, I lived there for so long. It was New York because I see your stuff that you post on going to steak places, and come on, isn't it funny that New York City's got the best steakhouses?
Yeah, they do. I don't know how, but they just do. I agree.
Have you been to?
I would put a pitch for Chicago, being a Chicago native myself.
Chicago. What's that fancy steak place in Chicago? Did you guys go there? Right? Didn't you do something?
Well, we've been to. So my current favorite is this place called Babette's that we went to. Right? There's always Gibson's, which is like anyone comes from outside. There's always Gibson's. But Brian, you're going to be here in June. Brian, you should probably make a trip.
Line up, Brian.
One of these steak places.
Lining up.
Yeah. Are you going to be at Future Proof in a couple of weeks or a month, whenever that is?
So Brian? There's a rumor. I'm going to photobomb your podcast.
Good. Okay.
Stop by.
Awesome.
Hey, yes, more than photobomb.
I will be there with my T-shirt and shorts. Last year, I was walking around with the baseball hat backwards and sunglasses. And there's a lot of Canadians there, so we want to make sure that they know that we've got our ETFs up and running. I think we'll be out like a couple of weeks after that. But yeah, I just drive over there. It's 2 hours from there.
Awesome. Well, it'll be fun to see you face to face. We have about 20 minutes, and just real more quick story. My son is 15. I've talked about him before. Real smart kid, respectful. Well, usually respectful. Kids sometimes their parents are not. Never gets in trouble. Literally texted a little bit ago. He has a basketball game. That's why I have to stop at 4 o'clock our time, go to his basketball game. He's like, I brought the wrong color shirt. Like it's white home, black away. I'm like, he's so stupid sometimes. This always happens. Brian, the kids get older, they get smarter. You have older kids. I've asked this before. My son is not getting any smarter. He takes the wrong jersey to his game. Do they get smarter as they get older? And then we can get to the markets.
Yeah, they do. Actually, it's my son's birthday today, so happy birthday, Jake.
Awesome. Happy birthday.
He's an outside wholesaler for First Trust, the amazing company First Trust out in Portland. So I talked to him this morning, so I'm very proud of him. He's an amazing kid. I love him very much. And my daughter lives in a suburb of Minneapolis, and I have a grandson too. He's the smart one. He's the smart one because he just works me over. I already told both my kids, I said, he gets it all. You get nothing.
Oh, yeah.
You're out of the will. So they get smarter. They get smarter because if they marry, both my kids have amazing partners, and quite frankly, they've each one of those partners have made them smarter. So you've got that to look forward to.
Yeah, I've got hope. There's hope that he'll start bringing the right clothes to his game, which I was so mad when I heard it. Literally, I was so mad. Anyway, all right. So let's talk markets for another 15 minutes and wrap it up. What do we want to talk about?
Let's flip that previous question around, like the bull market, right? Brian, what would it take for you to get bearish? Like broadly speaking, is it valuations? Like let's say 7 years from now, 8 years from now, whenever, right?
I want David Rosenberg to turn bullish.
Yeah.
And Peter Schiff. And who's that other guy? There's another guy that goes after me all the time. I can't remember. I don't read any. That's the funny thing too. My son or like Ryan Edwards that works on my team is like, if you read the comments about you, like people coming after you, it's like I don't care. Whatever. That's the problem. I think you need to see a massive buy-in, brothers. I just don't think we have it there. Valuation is the world's worst predictor of future stock performance.
Right.
I hate that thing about valuations in the bubble of 99, 2000. You weren't even there, man. Don't even talk about that. You have no idea what you're talking about. Okay. I think we need to see the bears completely capitulate. What if you thought like the risk reversal guys? I love both those guys. They've been great to me. What if those guys turn bullish? I mean, think about that. I love them dearly. They've been great to me, but I mean, we need to see something like that. I don't think we're anywhere near that time.
Actually, that gets you like we've just talked about. Stocks are up a lot last 12 years, 6 years, 3 years, whatever you count, right? Why do you think sentiment is as poor as it is?
I think that, so a couple things. You probably know these facts. Back in April, CBC all-time highs in terms of ratings, even higher than COVID. Fear sells. People are lazy. They don't read. They don't do the work. They believe in bullet points. They just want to hear what they want to believe what they're saying, and fear sells. And we're not going to give into that, man. We're not going to give into the rhetoric. And I personally took a lot of heat for being bullish in April, and that's okay. It is what it is. But the sentiment's so bad. Oh, by the way, too, don't believe any of these surveys. I think surveys are a bunch of crap. I already swore a couple times, so I'm not going to it. You know how you know what a person's doing? Oh, by the way, the old-fashioned, you sit down and you sit across from them and you look in their eye or you ask them questions. That's how you figure out if they're lying or how they're positioned. They all lie during the surveys. They all lie. The consumer's spending money like drunken sailors. They're going to fill out the survey like, oh, the world's coming to an end. Blah, blah, blah. Come on, man. Everybody lies in a survey.
Yeah, Elway's yesterday at 5:00 Denver time. They're literally, you couldn't sit. I mean, it was everybody buying $70 steaks. I want to take a second to thank everybody. Thank you to Pod Pony, our producer who's putting this together. I think we're going off without a hitch, as far as I can tell. I just looked. There's 4,000 people watching this currently on my X stream. I know a lot more on YouTube and a lot more, maybe not as many on LinkedIn, but nonetheless, wherever you're watching this special live stream of what do we call it? Social hour.
Social hour. Facts versus feelings.
Social. And we are planning on, now this isn't official, but we're planning on doing this the last Friday of every month. I know Sonu might do next month. From where, Sonu? Where will you be next
maybe in March. I may be in Florida, Brian's neck of the woods in Disney World.
Okay.
Disney.
So
I actually make it to Naples. I'm usually in Naples last 2 weeks of the year, year after year, because my in-laws have a place there. So next time we should.
Well, just for the record, everybody knows Belski's in Naples. So listen, I live in the blue collar part of Naples.
Okay.
Otherwise known as like North Bonita. I'm South Bonita, North Naples, so I'm not.
Okay, that's where we are too. Like Bonita.
Perfect.
Yeah. Motley Road. That's what I remember.
Well, good stuff. Anyway, but thank you to everybody. We've had a pretty good turnout for the very first one. We'll keep doing these on the last Friday of the month is the plan. We'll share on social, and everyone who obviously listens to Facts versus Feelings every week, we'll update you there. Sonu, Brian, we've got about 13 minutes. We want to be respectful and probably end top of the hour. Brian, how about you? What do you want to talk about? We've got 13 minutes. What do you want to talk about that we haven't hit on yet?
Hey, what's a sector you think not enough people are talking about? I mean, because we get to in this.
I was going to ask you that. Yeah,
let's all dragged up on. I'll use the Ricky Bobby. I'll hop up on do about tech, and then healthcare. But what do you think that people in gold? What do you think that people should be talking about that no one's talking about?
This tech. Actually, I had this. I was like, I think I'll Brian this. Why are financials not doing as well as it is?
I don't know, man. I mean, look at the yield curve; it's steepening.
Yeah, exactly. From my perspective, I'm a macro guy. Like, okay, yield curve steepening, financials where the action should be, but it's been terrible.
I'm befuddled. Maybe it's because you've got, Jamie Dimon's amazing, right? He talks about the world's coming to an end, and then he comes out with great earnings. I mean, it's just fantastic. No, I mean, our theme for financials is scale, man. Scale. Or you like the really big banks or you like the really small banks, because I talked earlier, and the very first thing that in my diatribe in the beginning was about relationships. The small banks just crush small relationships, and that's why the small banks are doing so well, and the really big banks. That's why I think the in-between financial, they need to merge, right? So even like a Truist and U.S. Bank and Fifth Third, I know they just bought Comerica. I mean, they need to get bigger because they can't compete with the small ones because of the relationship. They can't compete with the big ones because of scale. So I think, given the fact that we have deregulation, we're going to see consolidation, and yield curve's only going to steepen. We have too many banks in this country, and so we need to consolidate. They should be doing way better. And plus, too, if you believe in our whole notion of the market broadening out. Financials are going to be a huge part of the value index. Our value portfolio outperformed the Russell 1000 by 640 basis points last year, and so we think financials are going to be a big part of that. The other thing too is that think about how Berkshire got beaten up. There's no reason why Berkshire got beaten up relative to the other financials. We'd be buying that stock all over the place too. So to us, that's a big dislocation that I think is going to remedy itself.
Yeah, that's what I've been wondering. Like, why is Berkshire? I mean, I get it's in the financial sector index, but it's not JP Morgan, it's not Bank of America, it's not Wells Fargo, right? Yeah. Yes, Geico and all that. Actually, speaking of the middle, I did have one more. Like my favorite, like if you ask me to pick one favorite asset class, sort of sub asset class for the long term, 20, 30 years. This is how I'm allocated personally as well. Outside of anything in our own models that Ryan, myself, and the other guys manage, it's mid caps. I've always liked mid caps historically. And over the last year and a half, they've been lagging. Small's done better. Large is obviously tech and all that. Sure. I'm curious if you have any thoughts. I mean, you're a stock picker. What? Because I always think mid is a good place for. That's like, maybe a bias. The best of America in so many ways.
Right. So a couple things. Back in the old days, the S&P 500 managers would go down in cap and buy mid, and then the small guys would go up in cap and buy mid. And that's why mid did so well for those. So you're not supposed to have a favorite child. My grandson's favorite, but you're not supposed to have a favorite portfolio of the 5 that we run. Our favorite's SMID, and here's why. It's fun to manage because we can go 50 basis points to 400 basis points, and the large cap we got to get a little bigger because of the tech makeup and everything like that. And we play themes. Like for instance, I bought on shoes 4 years ago. 4 or 5 years ago, I bought
I have a couple of pairs of those.
Yeah, I mean, well, it's not just the shoes; they have amazing apparel. We get to buy cool companies like Celsius, Shake Shack because of themes. We used to buy one of the very first stocks we bought in this portfolio 8 years ago. What year is it? Yeah, about 8 years ago was Spotify. It was a $7 billion company then. Now it's a $70 billion company. So to me, that's the fun thing. Plus, I believe 10 years from now, we're going to be kicking ourselves if we didn't own more small mid-cap stocks. And I know we haven't had a chance to really talk about it, but I think at some point there's a looming private equity problem. And I think investors have gotten excited about buying private equity because of the stories. Well, guess what? Some of the same properties and stories are in publicly traded small and mid-cap companies. And so I think there's a major move coming in small and mid-cap. Better cash flow, discernibility of earnings. Some of them are paying dividends, and I think it's an amazing backdrop. Our portfolio is benchmarked against the S&P 1000. We beat the index last year again for the 3rd or 4th year in a row by I think it was over 300 basis points. And so we like that area. We think it's a fun area. And going back to being contrarian, nobody likes that area.
No.
And I think now it's time to look at something like that.
Interesting.
Well, that was great. I'm looking at the clock. It's amazing how fast this hour is gone. This was awesome, Brian. We have Sonu and I work with some of the best financial advisors in the country, more than 500. I think we cracked above $55 billion total AUM. Carson, I think we're in 44 or 45 states. Reason I'm not sure is because we're always signing new ones every single day. So we're growing quickly. So we work with people that own their own business. Really, that's why I love working with RIAs, working with financial advisors. They own their own business. Sonu and I and Carson, we help advisors grow. Bert White, our CEO, I know you know Bert. We had a town hall call yesterday. Yeah, yesterday. I was on an airplane. It's such a blur. And he just talked about how our Carson, I probably can't give the exact numbers away, but our Carson partners, our advisors, are growing substantially faster than the industry average because of a lot of stuff that we're doing. So, Brian, you've worked with advisors. What are some things you've learned that help advisors grow? But maybe more importantly, you started your own business in the last couple months. What is something you learned that you had no idea you need to know, but you know now when you're the boss and it stops with you?
Well, what's funny is that I'm like chief bottle washer. I take the garbage out. I'm chief compliance officer. And so I here's the thing I learned. I said equal parts overwhelming and excruciating. And I was complaining about working for the man. Sometimes it's okay working for the man because then you don't have to worry about all the compliance and the insurance stuff. And that's what has dragged. And I joked earlier about trying to get to the airport as late as possible because I live my life in a very efficient manner. Man, running a small business and being online with HR providers and 401k providers and figuring out payroll and doing all that is something that I did not account for. I really did because you made people money, they'll just give you money. So that I think the 3 B's of public speaking and the 3 C's of writing are the most important thing for brokers. And you got to tell them, you got to tell them again, you got to tell them one more time. You know that, right? You got to tell them, you got to tell them again, you got to tell them one more time. What's the 3 B's of public speaking with a broker? be brief, be bright, be gone. Right.
Yeah.
Get your point across and then write in clear cut, concise. You got to be clear cut and concise. You don't have to, you don't have to write these voluminous things. And brokers, I think, do an amazing job. At the end of the day, it's about the relationships. It's not about the broker being able to memorize what the dividend yield is on AT&T. It's about knowing Mr. and Mrs. Erickson's anniversary, their kids, what their kids need, making sure that they're all set with their 529s and their succession plans and all that kind of stuff. And those are major longer term themes. Lastly, in 2020, it was never more evident, I believe, that and I hate this when Wapner in the halftime show talks about dumb money versus smart money, and I've been all over it for years on them. Smart money for more than a decade now has been in private wealth because United States advisors, brokers have done an amazing job with their clients relative to what happened in the 90s. They've done an amazing job positioning them in terms of asset allocation and what they need to do. They are the smart money. In 2020, I was inundated with private wealth calls when the world was coming to an end and we were super bullish and jumping up and down about where to put money to work. Whereas on my institutional side of things, nobody wanted to talk to me. Just Belski, Pollyanna, don't listen to him. He's negative. Blah, blah, blah. Where the wealth people are like, Belski, what do I buy? Smart. So don't buy that crap that retails the dumb money. Retails the smart money and has been for a couple of decades.
Love it. Sonu, one more from you. Let's wrap it up with this one.
Yeah, I'm trying to think. Actually, let's just finish it. Is it better to be contrarian or do you ride with the herd momentum?
I think it's better to be contrarian. And so if you think about this, I think it's contrarian. I really think it's contrarian to be longer term bullish. And I think at times, man, I think like I can remember times in my career when when I was so down on myself, man, that, oh my gosh, you're wrong. And that's when the market turns. And so it's really sentiment, and so I think always don't be contrarian just to be different. Be contrarian if you have the analysis to back it up. And the mere fact that nobody believes we're in a 25-year secular bull market, the mere fact that everybody believes that binary trading, yes, no, green, red, buy, sell is the way to be trading, that you can't be bullish one day and bearish the next. I mean, that kind of philosophy has been going on for a while. I'm the anti thing. Stocks for the long run, 12 to 18 month positions minimum. You're not going to be the smartest guy in the room and pick the bottom of the market when the market sells off. If you know this, Ryan, if you miss the majority of the best days in the market following the worst days in the market, all this kind of stuff. And guess how you participate in those? You maintain investment dollars. That's how you do it.
Yeah, there you go. Straight from the man himself. No, this is great. Thank you, Brian.
Yeah, this was awesome. This was the very first social hour of Facts versus Feelings. I think it was awesome. I don't know, Brian, you set a really high bar. I don't know who we're going to have next month, but this is a pretty...
Hopefully you have fun.
They'll be better. Remember, I'm photobombing you. I'm going to find you at Future Proof.
That's true. Well, we'll be there. There's a lot of people going to be there, but we will be a Future Proof. That'll be great. And it looks like that sun's coming to get you there, Brian, as I look at you down there. It's like you're kind of in the shade, kind of not.
I know. I'm sorry.
No,
it's not
fine.
Professional. It's not
No, I'm just taking our time. It's all good. I mean, I'm drinking Detrick whiskey on this thing, so don't worry about professional. It's all good. It's all good. Listen, we had, I look, thousands of people watch this live. We're going to pump this out again on the replay, I guess, for our podcast next week, so everybody listens to it. But definitely, everyone knows Brian Belski, but please look up Brian Belski and Humulus. What's Humulus? What's the exact title of your company? Humulus?
It's Humulus Investment Strategy. So HUMILISINV.com. We got a fancy website.
Yep.
And you can sign up for our research if you'd like to see that. And we'll be on a platform near you very soon. In the U.S., we're already in Canada, but we're going to be on some U.S. platforms that everybody knows very soon.
Perfect. That's a great way to end it. Thank you so much, everyone who joined us on this Friday. It looked like markets bounced back a little bit from the open. We had another positive January. Sonu and I will talk about all that stuff next week on the regular Facts versus Feelings. But Brian, thank you so much. Thanks to Pod Pony for producing this. We'll see everybody very soon. Enjoy the weekend. One more weekend of the Super Bowl. Last thing, Brian, who's winning the Super Bowl? Then we'll end.
Oh, man. I'm a Minnesota Viking fan, so we're all bitter about Sam Darnold. But and the Patriots, I think Seattle's going to win. I do. Yeah. I think they're the better team.
Agree. I think Seattle. NFC, and when the NFC wins, it's better for the stock market, right? So
Sure is.
There we go. Let's go with that.
I'm glad you didn't ask me that.
There we go.
But
There
we'll
we
talk
go.
about it.
All right. Thank you, Brian. Thanks, everybody. We're going to sign
Thanks,
off.
man.
1 hour. We
Take
hit
care.
the mark right at the top of the hour. See everybody. Bye-bye.
Bye.
Thank you.